The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 12th, terrific Tuesday edition of today's Trader's Edge Show. I'm your host, Steve B. Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We'll go figure out what the bulls and the bears, what the buyers and the sellers are communicating to when I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in right now, 877-927-6648. If you can't dial in, you can always send me an email, steve@tfnn.com. Inside that heading, just put radio show question. And, of course, inside the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, the Dow off a point. The S&P is down a point as well. So we've got flat markets there. The NASDAQ's up 5. We'll call that flat. Russell's back a point. We'll call that flat. Semiconductors up 3 points. We'll call that flat. New York Stock Exchange off 16 points. We'll call that flat. Basically a flat market out here. If we take a look at gold, it's up $6, about 0.5% to the upside, 0.7%. In the case of silver, that's 12 pennies. Light sweet crude back $2, 2% or $1 out there, $1 Mortimer. And leading the charge here to the upside, Amazon up nearly $11. That's a little over 1%. Coherent Inc. up 960 or nearly 4%. BlackRock up nearly 2% or $9. Equinix up $7. Stamps.com up $5, 2.5%. To the downside, 9% to the downside. Mercado Libre, $25 is what she is off. Trade down to $249. Ulta Beauty, not so beautiful today, down 6.5% or $13. China Biologic off $11. That's 11%. Domino's Pizza having a tough day, down nearly 5% or $10 out there. So we've got plenty to look at. Of course, I want to take a look at what you want to look at. And so the first thing to take a look at, subscriber had asked a question with regard to why I was having subscribers consider going short the market. Now, the parameters did not execute yesterday morning, and my apology for being away. I had to have some oral surgery. I'm still in not the best of condition out here, but we're just going to go ahead and forge through this and see how it goes, and I'll deal with it after the show, and then we'll just try to figure it out. But knowing that I was going to have this oral surgery on Monday evening, I was pretty in bad shape Monday evening. There were certain parameters I was looking at so that on Tuesday morning, yesterday morning, if certain conditions were met, they knew to go ahead and take a short trade. Now, those conditions were not met, and I said, if they're not met and the ES Mini was trading above a certain level, we were likely to see a new all-time high form inside the S&P 500. Well, in fact, that occurred out here. Now, I didn't get a chance to listen to Basil's show. My guess is he covered this or he pointed this out. But if not, one of the reasons that we were taking a look at a potential short trade was because we are now in wave number 7 inside of the S&P 500. Intraday, before we came on the air, the S&P 500 went ahead and made a new all-time high today. It did that yesterday. That was the beginning of wave number 7. Because we went ahead and hit a new intraday high today, we now have extended that. And at the same time, price is starting to move higher with less relative energy. Maybe let's get rid of this Gartley buy pattern out here. Let's turn that off. We're just going to look at the A to B equals. So we're going to see a number of patterns that are coming together in essence at the same time. So number one, you've got a 1 to a little bit over 1 to 1.618, A to B equals CD to the upside. Can price go higher? Absolutely. What are we paying attention for? Looking for some type of bearish reversal signal out here. Where else are we at? We are in wave number 7. Not always, but oftentimes wave number 7, for whatever reason, can be the point where we start to see the largest corrections. To the upside or the downside, in this case here, could be to the downside. We have pattern number 3 that is underway, with price moving higher, doing it with less relative energy. Therefore, you see the little black diagonal line on my screen. I'll update the chart here. You'll see it going from the candle session of, what was this? This was October the 5th through today out here. So that is the potential with regard to patterns. Each of these are potential. As long as price trades above Stevie's red line, 25.49, they will only remain potential. They will not be reversal signals out here. If we did get a bearish reversal signal today, and you could get that with a close below 25.49, you don't actually need that, but that would be the preference out here. Then what we would have is a indication that price is going to pull back to about 24.95. Does it have to pull back there? No, but that would become my target. So knowing that we're looking at about a 50 to 60 point move to the downside, from my perspective, that would be a good trade. Are we going to get that? I don't know. I just know that we have the patterns that are setting up here inside the S&P 500. If I go take a look at the legs inside the S&P 500, the sectors really, if we take a look at the XLK out here, it too only makes sense that it too is in wave number 7, although this is off of a different swing point out here. So we've got wave number 7 that has established itself. 60 bucks, even Steven is its red line. You've got an A to B equals CD that has completed. No bearish reversal signal. XLK can easily target 60.97 before turning around. But so there is potential out here. That's the number 1 weighted sector in the S&P 500. The XLV, number 2 or 3rd weighting inside here, has been struggling to get above Stevie's red line. That number is about 82.88 out here. That's not bearish, but it hasn't been able to take out its swing point from the trading session of September 13th. That has to make you say, something to think about. If we go take a look at that number 2 or number 3 sector out here, the only reason why I say number 2 and number 3, I haven't looked at the current weightings out here in probably a week or so, and so these things shift. You can see a large A to B equals CD pattern. Let me get rid of the Gartley. But oftentimes a Gartley pattern, the ultimate of any Gartley, buy or sells that it turns into an A to B equals CD. Well, if we turn off the Gartley buy, now you'll see the large A to B equals CD. And in essence, that price pattern has been met. That target would have been 26.49. We just look at these things as guidelines out here. We've seen now today's actually the only bearish reversal signal that we've had out here as it's completing an A to B equals CD. A couple days ago, 4 days ago, you had a TD combo count of 13 out here. So this has potential for where the market could go ahead and turn around to the downside. If I take a look at the XLY out here, you're going to see this has been in a sideways consolidation. You had a little gap to the downside, ran into support at its bottom of its TAS market profile out here. But this is looking like it, too, wants to go ahead and pull back. So that's 4 sectors that are setting up the potential. If we look at the XLP out here, this baby, it's just having a little bit of a counter trend rally. 54.60, probably where it's headed to. Now we come back from this breakout here. I'll go take some more ad. No, I can't take any more. But when we come back, we're going to go take a look at some analog charts out here. Because if these patterns don't reverse, that's going to tell us something as well. Steve Rhodes with TFNN. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we've got to, and we'll go to the analog patterns here in a moment. So the S&P, the ES Mini, we've got the same patterns, basically, that are unfolding. The ES Mini has not made a new all-time intraday high out here. And so it is in wave number 7 still. Price moving higher, doing less relative energy as we speak. So again, this has the same patterns out here. If you are paying attention to the ES Mini, it's going to be 25.47. That is Stevie's red line that price would need to close below in order to get your skirt in a tizzy out here. Speaking of tizzies, let's go take a look at the Dow, which has been super strong, yet prices beginning to move higher, doing it with less relative energy out here. Again, not an issue as long as it moves higher with energy. Should the cavalry show up, that would be the bear cavalry, and price were to get below 22,751, it would be giving you the first clear signal that a move down to 22,250 or so is likely to be underway. However, without the bearish reversal signal, it doesn't mean diddly out here. Now, in the case of the Russell 2000, this has already given us a topping signal when it formed a nice little 1.618 butterfly sell pattern out here. And it did this several days ago, 2, 4, 6 days ago. Price yesterday, price today below Stevie's red line. The thing is, I don't know if the pullback here is only going to get us to 1480. Now, I don't know that we're going to get a pullback there. And if we don't get a signal in the Dow and inside the ES, the S&P out here, then we won't see the Russell 2000 pull back to that area. So we've got potential out here. So that's numero uno. Of course, that was a number of charts here to be paying attention. What else is it that we're looking at? Well, if we take a look at the summation indice out here, there's a number of different patterns that are setting up that are unusual. They're unusual in that they're not so unusual with regard to how they might call a market pullback or some type of short-term top. Now, the NASDAQ composite, albeit at trading at 66.06, if we take a look at its advanced decline oscillator for the last couple of days out here, that's yesterday and today, that's now you'll see that the summation index has turned red. That tells us that our advanced decline oscillator reading is below 0. Now today, if it pops up above 0, it tells us that sellers really never had control yesterday. Yeah, even though the market was moving up. This is a great way to try to identify, I suppose, distribution out here. Now, we're not talking about any kind of major top. We're really talking about you loading up the truck to be able to buy the next bottom. That is if, in fact, we get a next bottom. But there are enough signals out here that you don't have to pay attention to it. I'm going to go ahead and pay attention to it. And the NASDAQ is one of those with regard to its advanced decline oscillator reading. When you get below zero, you can see if we pull back to the last time we were below zero out here, that was on the trading day of July 27th. You didn't get back above zero until the trading day of August the 25th. That had led to a decline. Now, you can see here that as the market was moving lower inside the NASDAQ composite, from August 10th through a lower low intraday, certainly on August 21st, we had a rising advanced decline oscillator reading. Now we have price moving to higher ground, and we have a declining tops oscillator reading. The exact way that a bottom is formed, the opposite is true for the top. So you wouldn't notice this. You would say, hey, we're at all-time highs inside the NASDAQ composite. How can that be, Steve-O? I'm just telling you, it can be. Now, inside the New York Stock Exchange, we're seeing a similar pattern, albeit that a couple days ago, when its advanced decline oscillator reading got below zero, you'll see that by the red data inside the summation indice out here, it only lasted for 1 day. That's a false signal. You always want to see follow through to the downside. So what this actually meant was that, hey, it is buyers that are in control, not sellers. Intraday, we saw this back below zero. We're not below zero now. Nonetheless, it still has a declining tops. You might say, I can't see that declining tops that well, Steve. Well, here you go. Now, if we switch over to the larger view out here, you'll see this declining tops pattern in a big way. Just as it made bottoms out here, giving us a signal, it can make tops as well. Now, how far will the New York Stock Exchange pull back if it does? Look, it may only pull back in the 12,100-ish type area, but it is something to pay attention to. What else do we want to take a look at? Well, if we take a look at the spot volatility index, the closing of it, that's the green line below. What you'll see as we speak right now, it's looking for the S&P 500. It's making higher highs, and the spot volatility index is making higher lows. That pattern has always led to some type of market pullback or decline. Maybe it's only 2% or 3% or 4% or 5%. Somebody tell Russ that you guys have sound. He just doesn't have sound out there. And I hope that that's the case. Otherwise, I'm just talking to myself. And my mouth doesn't really feel like just talking to myself. But what you will see on this chart here, I'll give you the sign language, it's making higher lows inside the spot volatility index as prices making higher highs. This says you've got to pay attention. I want you to pay attention out here. Now, many people think of me as just simply being, the bull of all bulls out here. And there ain't no bull about that, by the way. But these are important signals out here. They're not the be-all to end-all type signals, but boy, you've got to pay, or you want to pay attention to those. Now, that's fast forward into, hey, Steve-O, where are we in the analog series of markets? Well, you guys are all familiar with this one. Probably till you're blue in the face out here. And this is the historical Dow analog pattern since 1933, which typically, you'll know that, typically calls for a high in July and a low in October. This year would have been July 21st as a high. Did that happen? No. This is the Dow, by the way, and a low into October 13th. A couple weeks ago, I started looking at this and said to myself, this pattern is not working. Why? What have I missed? What have I overlooked out here? And that led me to say, well, I don't know. Why don't I just go take a look at the analog pattern since the beginning of the bull market in 2009? That is represented by the blue lines on this chart out here. And what you're going to see, and I wish I had caught this earlier, and I didn't. It felt like taking a gun to my head when I saw this. Sunday night, I really felt like taking a gun. Good thing I'm not a gun owner, because the pain was just extraordinary. But if we take a look at the current bull market since 2009, the bottom doesn't come in the middle of October. On average, so over these since 2009, it comes in at the end of August. I think specifically, whoops, didn't mean to do that. Oh, again, let me see. What is it? Let me see if I do it here. Does it give me the number? Shoot, it doesn't. I got to do it's. I think it's right around August 22nd, 23rd is the time frame out here. So our normal Santa Claus bottom since 2009 appears to have already occurred. So what I was looking at a couple days ago was the fact that there's this little wiggle. We had a little wiggle room out here, and with these tops that look like they were forming, look like the next pullback could be into October 16th out here. It's October 12th. That's 4 days away. That's only really, when is the 16th? Is that Monday? Is that Tuesday out here? That could be the extent of any pullback out here. But you can see how during since the 2009 bull market, it's been really a straight run since really October 2nd. You know, you make a bottom here in August, you make one here in October 2nd, and then it just see you later, sayonara, adios amigos, we're headed higher. That may be the case. These other patterns we're looking at may not be anything. We come back, I'll just give you the update on the years ending in 7, which basically forms the top today. Steve Rhodes with TFNN.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. So we'll leave with this last analog pattern out here for the Dow. This takes a look at the years ending in 7, going back 120 years. So we only have 12 sets of data to go take a look at. But at this stage of the game, there is supposed to be a top that would be... Now, this chart here, with regard to the analog pattern, 2017 is following this one pretty well. The question is going to be, and we should know soon if we don't already know. So you have all these different topping signals, short-term topping signals, but you never know what short-term really might be inside a marketplace. Price moving higher, doing with less relative energy. If there was one pattern that was associated with tops and bottoms, well, that is it out here. We don't know if these are going to confirm or not. We just know that they're present. Is it a coincidence that they're happening at the same time that inside the Dow, years ending in 7 are supposed to form a top out here? I don't know, but we're going to find out. Now, this chart here, if we took the last 120 years and then went ahead and put it on 2017 calendar basis, it should have been 2 days ago. Should have been October the 10th out here. In essence, that was the day I was looking at, hey, we might go ahead and go short if certain conditions were present. So that's really what I was looking at with regard to price moving along this line out here. But if prices continue moving higher, they just blow past all these other patterns, then what you and I have to say, we don't have to say anything, but I'm going to suggest that it's really the normal pattern since 2009 with regard to when the Santa Claus rally begins. That's in August, and we're just simply not going to see much in the way of wiggle room to the downside, and this would qualify as trading a vertical type of market out here, and you just simply hold your nose, jump into the deep end, give yourself a wide enough stop, and you go from there. Yeah. That is one possibility. So, of course, there's anything could be a possibility, right? But there you have it with regard to, hey, Steve, why were you looking at the short side in the market based upon perhaps a bottom coming in on October the 16th? And so there you go. As Gus would say, from my big, fat Greek wedding out here. Now, I don't have any requests that I see by phone or elsewhere. Of course, most people probably don't think I'm doing the show today, so why would you go ahead and listen on in? I get that. So what do you want to go take a look at next? I don't know. Let's go. Gus would say, I don't know either. But let's take a look at gold. Okay, so let's look at gold straight up $7. Where is gold headed to? If we go take a look at the set of market profiles out here, 6240 daily and weekly, then what we're going to find is that where gold is headed to is $1,317.60, if you want to be exact. Now, you might say, how did you get that, Steve-O? Well, I'll tell you how we really got it was 3 days ago when gold was able to take out the 1289 level. 1289 was Stevie's red line. 1289 was Johnny's red line. That was the TAS market profile on a daily basis. Once you get above that, it says all systems are go to the next higher level. Well, you go from daily to weekly. We know that gold found support, found a bottom at the bottom of its weekly profile, which has a bullish structure. That was 1261.70. Did we hit 1261.70? No, we did not. We hit a price point of 1262.80. So it was off by $1.10. $1.10. You got to love that on a $1,200 instrument out there. So that's a bullish structured box. Our best estimate at this stage here, based on profiles, is that price is headed to 1317. Now, in order for that to come to fruition out here, gold's got to get its head back above the 1295.70 level, or 1295.50. 20 cents. Is 20 cents important? Yeah, it is kind of important out here. You get back above that, then you're headed to 1299.30 to 1317.60, and that is what we are looking at inside of Goldilocks out here. Any other requests? We don't really have any requests that are out there. So let's go take a look at some individual stocks until we get the requests out here. So let's go take a look at, let me do this here. Let me turn on some volume, some market profiles. We'll go take a look at the individual stocks. Let's go take a look what's moving to the downside. Let's take a look at Mercado Libre, MELI, down 11% or 29 buckaroonies, 1.9 million shares behind that move, coming into a swing point that looks like 1.9 million as well. That was back on August the 2nd. So this says Mercado Libre is going to go at least test the 232.17 area. That's low from October the 10th. Now we can see out here that this is really in some type of consolidation. Now, you say some kind of consolidation. Well, what do you mean, Steve-O? Well, if we take a look at the gap that this had to the upside, guess apparently my drawing is not exactly as good as it had been. I'm a little rusty on the drawing out here. But on the trading system day of May the 5th, big break to the upside. Now, 1.7 million shares to the upside. And previously, back on August 10th, 1.9 million to the downside. But that was basically the breakout here. So you've got a nice rectangle consolidation of about, we'll call it 300 down to about the 233 level. Watch for the test in the case of Mercado Libre. Watch to see if it tests and rejects 232.17, does it with less than 1.9 million shares, because then you might have a nice consolidation trade up to at least 287.70. A move down to 238.34 that holds would be a beautiful thing. Let's go to Ron in Denver. Ron, thanks for calling. Thanks for holding. How are you? Ron, we have you?
Hi, Steve. Steve,
Hi, Ron.
can you hear me?
I can hear you just fine. Thank you.
Okay. I took your recommendation about, I believe you said that with the yen going lower, the gold was taken off. So I sold on GOLD. I did a put spread. I sold the 95s and bought the 92.5s about a week away and brought in $1. Just did what I call an income spread. And then I also bought calls on ABX, and I just wondered what you thought of that.
Let's go take a look at ABX, Barrick Gold out here, which is trading at 1673. Let me put this on my other chart as well, and then we'll go ahead and pull it over. In the case of Barrick Gold, where is it that you have as a target?
I bought calls on it, I don't know, yesterday or day before. I really don't have a target. I went out about a month.
Okay, you're out about a month. Okay, so in the case of Barrick Gold, what it looks like it's trying to do to me, Ron, is head up to the 1717 level. Right now you're at 1673. If it can get above there, which it looks like to me it wants to do, the next two price target areas are about 1776 to about 1821. What you want to see this continue to do is stay above the price point today is 1653. That number is going to change tomorrow and the next day. But as long as Barrick Gold, ABX, stays above 1653, it at a minimum has more counter trend rally in it. And that counter trend rally should take us to the 1717 area. Now, in the case of Barrick Gold, the reason why we're paying so much attention to that red line number, which is 1653, is that for any reason Barrick Gold closes below, I don't care if it tests it intraday, Ron, but if it closes below 1653, then we start to have a falling price off. So that's the bottom portion of my screen below zero, and that's never a good thing. Now, price might find support at 1602, but it might not find support at 1602. Can you stay on through this break?
Sure.
Okay. Go back to Ron, make sure we answer all these questions about gold, Barrick Gold, and anything else. He wrote
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan Logan's most recent webinar, How Price, Volume, and Time Make Market Profile So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We're on the line with Ron in Denver. We're talking gold and Barrick Gold, ABX. So, Ron, you also want to be watching gold. You want to see this continue to close above 1290.10. Just like Barrick Gold, if we were to close below what I call my red line, that's the oscillator and change line, that says to us we have a falling price oscillator below zero. And all we really had in both these equities, or one futures contract, one equity, was this little counter trend rally, and it's over. As long as price stays above that, then I would say gold moves to 1317. And in the case of Barrick Gold, it moves up. Where did I give you as a target here? So Barrick Gold would be targeting 1717 next. Does that answer your questions, or let me know what I can answer for you? Uh-oh, I have no sound. It must mean I have no Ron. So, Ron, I hope that helps you out. Watch those levels out there. We had a question inside the Tiger's Den from Top Dog. Wants to take a look at Amgen. So if we go take a look at Amgen, AMGN is the ticker symbol, as well as a signal. And the question was looking for an entry out here. So here's what we know about Amgen. Number one, at its high, it made a nice little Tom DeMark TD sequential 13 count. That was a trading day of September 12th. You received an actual TD sequential sell signal, looks like right here on the trading day of September 18th. Now, we also know, and take a look at this chart, is prices below the daily market profile out here, as well as looks like it's below a hammer candle. Let's come back to these charts and go take a look at our three different time frames out here. Let me put the daily. Here is the hammer candle. Let's go put a yellow line from the low of the hammer candle. That's a trading day of September 29th. That was 183.17 or 182.96. We say when you trade below a hammer candle, if you're long, you're wrong. Now, that could be the B point of an A to B, small A to B equals CD to the downside. But the volume on that hammer candle was 3 million shares. Today, you're 954. You're 2 million shares short. Nonetheless, if you close below a hammer candle, says this wants to continue to move lower. If price closes back above 183.17, then you might have a shot at this, because this is certainly going into signs of strength. 3.9 million on September 12th when it made the high, 3.7 million on September the 11th out here. Let me put the weekly. Let me see what the weekly profiles look like. Let's turn those on. I just have to go to the weekly chart. Hello, duh. Here is the weekly time frame chart. So the weekly time frame chart says that support might be at 181.27 out here. From a weekly perspective, that high was made with 18 million shares so far this week, 7.5 7 million shares, 7.8 million shares. 181.27 top dog would be a place to look at. It would be something to consider out here. If that doesn't hold the support, it then looks like target of pulling back to 163.89 when we take a look at the monthly TAS market profile. Let me just see what this A to B equals CD, because you can form one of those A to B equals CD patterns even on lighter volume. That becomes what? A Gartley buy pattern. That's got the 182.07 number in there, 179.91. I would say you want to see light volume top dog, and then you want to see some type of bullish reversal signal before you decide to go ahead and get long Amgen, AMGN. So I hope that helps you out. Check the phone, see if there's any other requests out here. So far, so good. Not so good if you're in California, in Napa Valley, where I'm supposed to be, where I will be 3 weeks from yesterday. They are having a tough time out there. May have to change plans. One of the estates that I was going to was Signorella, which is one of the wineries that burnt entirely to the ground out there. So that's a real bummer, because they have some pretty amazing wines out there, and it was going to be a pretty amazing experience. So our hearts go out to them. And then you've got some of these other wineries that are not necessarily in good shape, and some pretty nice places to stay out there. So hopefully they get those fires out and under control. But you don't want to hear about that. Let's go take a look at what else is moving in the markets out there. Let's go take a look at Ulta Beauty Salon. Let's go see what this is doing. Down below a swing point, 3.6 million shares, and that swing point had 1.7 million shares. So this does not look good. Let's put this on the 3 time frame chart out here. This is ULTA. So we know that from a daily perspective, it's not good. From a weekly perspective, it's not good. From a monthly perspective, it's not good. So from a weekly standpoint, let's get rid of the A to B equals CD to the upside that had completed. It's taken out a weekly swing point that has 9.7 million shares. Could actually do that tomorrow. And if you do, inside of Ulta Beauty Salon, they've got a lot of retail stores. Maybe this is a retail that's going to truly take it in the shorts, get you down into the 120 to 90.28 level. ULTA is the ticker symbol. We'll have a confirmation on that weekly A to B equals CD come tomorrow afternoon. Monthly basis, that too does not look good. That is Ulta Beauty Salon. Opinion on the VIX, if you will, Steve. My opinion, Tuck, is that it's signaling to you and I, man, that tooth area hurts like a booger. What you've got going on inside the VIX right now that I'm looking at here, Tucker, is we are starting to form higher lows out here. That's the bottom panel. Green line is the spot VIX index. And the top numbers out here are the S&P 500, which on a closing basis is making higher highs. Whenever you have that pattern out here, it says the S&P 500 is getting ready for some type of correction. Now, how big of a correction? Is it only a pullback into the 25.42 or 25.32 or somewhere around there? It's a possibility. We go take a look at the ES Mini and its profiles to really try to identify that. But this says to me that the spot volatility index here is giving us signals that it wants to go ahead for 1048. And if price goes above 1048, Tucker, you're looking at 1262. I hope that helps you. Let's go to Bill in Springfield, Missouri. Bill, thanks for calling. Thanks for holding. How are you today? Bill, do we have Bill?
Yeah, fine, thank you. I just follow the IWM.
Okay.
All right. Hello?
Yeah, I hear you. I've got you. Tell me what you're doing, how I can help you.
Okay, on the IWM daily chart, there's a pretty good sized gap at $127.72.
Okay.
Is that gap ever going to fill, or when?
Well, I'd have to really go back and study the IWM in its entirety to see if there are any open gaps out there. How are you playing? So you're asking a good question. I don't know the answer to it. My assumption would be at some point in time, yeah, sure. But I'd have to go really back and take a look at the IWM and, see what other open gaps there might be out there.
Well, this is November the 11th.
No, I know where you're looking at. I can see that gap. Can you stay on through this break?
Sure.
Okay.
Sure.
Because I want to know what it is you're looking at doing inside the IWM, so I can help you there as well. Steve Rhodes from TFNN will be back with Bill. My favorite states: Missouri, Springfield, Bass Pro Shops.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com. Educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. We're on the line with Bill from Springfield, Missouri. Bill, thanks for calling in. You had asked about a gap back in November of 2016. There's plenty of gaps that are open. You could go to November 4th, 2016. Really, it'd be November the 7th, 116.90. There's another gap that is open from the trading session of February 16th in 2016. That's still open, 96.81. So, there certainly are open gaps that are out there. But that being said, tell me what you're doing with the IWM, and I can see if I can put a set of eyes on it for you.
Well, I just use it as an indicator of the entire market.
The IWM?
Yes, sir.
Okay.
With anticipation that these gaps will be filled, and how much longer will the bull run just keep on going and going and going?
Got it.
Yeah, there's several gaps.
Many. And so I think that the first gap then that it has to get through to start to give you information is going to be September 27th. So the low on that session is 145.16, and the high on the session before was 145.15. So there's a 1 penny gap that is out there. And before any of the lower gaps can get filled, that one's got to get filled first. And that's your first level of support inside the IWM. Wide-ranging bar, had volume, had a gap. That is your sign of strength inside the Russell 2000. That becomes really, from a gap perspective, your first level of support on any kind of pullback.
Okay, and that was my other question. 1 penny gap will be filled if you live long enough.
Yeah, absolutely. Well, let's make sure that you and I do that, okay?
Okay, yeah.
And there is a topping pattern inside the Russell 2000, so we'll see if it can get back to that 145.16 level. All right, my friend?
Yeah, that would be our first objective, and then but these other gaps will be filled.
All righty. I'm putting that on my pad of paper. You make sure you call in when that happens.
Well, okay.
All righty.
I'm asking. They will be filled.
Yeah, you know what? We're out of time. We're heading off the air, but I'll try to answer that for you tomorrow. Okay. Thanks so much for listening, as well as calling, folks. Stay tuned. David White, your favorite Polar and Bears up.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.